Hello again, this is Alex with MasterChartsTrading.com. Today is Sunday, March already, 15th, 2020. I'm really late releasing this video, but I'm hoping to make it up to you guys. So we have a pretty long video, but I wanted to start off with just some questions that are people asking uh, in the face of new threat from the epidemic of COVID-19. uh, we look at just what is important to you. Why do you really need the money? We're traders, we trade, and we sometimes get just a lot of money. What do we do with that money? Do we just blow it on some entertainment, or do we do something that is worthwhile with them, that is interesting? So this is a question that each person needs to answer. And the other question, of course, is how will people remember you? What did you do with that money? Did you become a total uh, unmanageable person, or person who you don't want to hang out with, or vice versa? Did you become very uh, open-hearted and loving, and people will remember you fondly? And what is important to you? Uh, is a toilet paper roll really worth the fight in the supermarket? Or perhaps, you could donate some of that hard-earned money to some kind of a worthwhile cause. So those are some of the questions I sometimes ask myself, and I hope you do too. All right, so it is Sunday. I'm very late. I live in San Francisco Bay Area in Santa Clara County in Silicon Valley. So right now we have a state of emergency here due to COVID, so things are a bit haywire. But today I have a huge agenda for you, so I will go through as much as I can. I'm getting people, asking me questions, and I will kind of try to go through them. So Friday the 13th, March 2020, Donald Trump, the President of the United States, declared a national emergency. This, of course, has huge repercussions throughout the world, etc. Right now, the overwhelming evidence favors the beginning of a bear market. What this means is the stocks may bounce, but the direction, the trend has changed. It is no longer up, it is now down. What that means is I will show you that we will need to be looking for opportunities to sell. A vast majority of stocks during the bear markets and during the bull markets as well move in lockstep. So what does it mean? That means that if you find some stock which is not yet sold off, that is an exception to the rule. Usually stocks move together. So I would just avoid buying stocks. I would consider shorting stocks, but I would definitely avoid buying them. Central banks and governments are just struggling, and everybody is doing their own thing. But monetary and policy bazookas, this is what I'm reading in the newspapers. However, traders should consider shorting at specific resistance levels. I will show you those resistance levels. And the long-term investors, I think, should consider exiting their positions, even if that means at a loss. Uh, there is a very strong possibility of a concerted effort throughout the world to just close all of the exchanges. And they could just stay closed for a few months or a few weeks until things just blow over, as it did at the beginning of World War One. Stock markets were closed for 4 months. Warren Buffett was surprised, and it says it took him 89 years to experience a collapse of the nature that we're witnessing due to oil prices and coronavirus fears. All stock sectors are in the bear markets. Vast majority of countries and important uh, conglomeration of markets such as emerging markets, Japan and Europe, are also in bear markets. See, I have 3 slides. I normally have 1 slide. Also, don't forget to hit the like button, of course. I will show you kind of trader education and what happens if you don't exit at your predetermined stop. We look at the bond market and it's just collapsed basically. We'll look at the interest rate curve again, and I don't think we need the interest rate lowering, but I think Fed will do it anyways. Lots of gyrations in the currency arena, and this is weighing on gold and especially silver. And I will also, I guess, look at oil uh, later on as well. And we are gonna at the very end look at our MasterCharts trading robot as it again nails a huge 56% move on Bitcoin. So all hail to the robot. All right, so I don't forget, I'm gonna put in oil here somewhere around the commodities. Okay, so let's go through that. A lot of to cover, and this is going to be a longish video. This is S&P 500 E-mini futures. So the bear market began on 9th of March 2020, right there where the candle is. You can see the drop below the yellow line. So first of all, I want to explain what these lines are, and these are mathematically calculated. These are called MasterCharts Trading price action indicators. They are available on TradingView. If a price has closed above the blue line, you can see the blue line where I'm hovering, that means the market is in a bull market. This particular security, for example. In the bull market, we should be buying. Vice versa for stocks, and this is a stock um, futures, I use the yellow line as a line in the sand. And this means that once the stock closes below the yellow line, it is now in a bear market, and we should consider shorting it. So what do you think this is now? It is now in a bear market because it has closed below the yellow line. It's really simple. Um, Now, people keep asking me, what do these lines mean? How are they calculated? Now, unfortunately, they are proprietary, or fortunately, this is proprietary information, but these indicators are available for you to use. All you have to do is just sign up at MasterCharts Trading, and I will open the door for you on TradingView.com. So all you have to do is just sign up on MasterCharts Trading, subscribe, and then I will open the door for you. So to make things very simple, if a security closes below the yellow line, that means the security now is in a bear market, and this is for stocks on daily charts. I will get to Forex, etc. later on. So what does it mean for ETF SPY, S&P 500 ETF SPY? Uh, It is now also in the bear market. It started right there on the 9th of March. You can see a close below the yellow line. Right now, looks like the rally is beginning. So the banks have come out and let me go back to the. So the central banks have come out and started tinkering. So there is something about 1.5 trillion dollars coming out of the Fed. And then I'll also get to the interest rate curve later on. But the fact of the matter is that they're trying to stem this waterfall of selling. It looks okay right now. Looks like we're gonna see a rally. Looks like the rally is beginning. You can see a big hammer-like candlestick where I'm hovering here on the 13th of March. It's a big rally. It's like 8 point, almost 9% rally from the lows. I think that we could easily get up to 281 or possibly even higher to like around maybe 300 maybe 297. But again, those levels is where I would consider opening a short. I would not consider buying it just yet. I mean, the price could continue higher and close above the blue, in which case it would be a V-shaped reversal and I have no problem buying. I just right this instant have a lot of problem buying because I think we're in a bear market, so I would have much easier time shorting. If you can short, The other option is to just avoid buying stocks, so just exit everything. That's what I did. I have 0 stocks right now. IWM small caps collapsed. So the market, the bear market for small caps actually started a little bit earlier, right there where I'm hovering, 28th of February, and it just collapsed basically. Uh, this is not a good sign. You know, we're seeing just huge reaction to this coronavirus event, and like I said, there is a strong possibility the markets will just close and no transactions. You cannot make any transactions. So let's say you place you know, an order, you buy something, and then they would close the markets for 2 months. And I was, looking at the stock markets during World War One when they were closed. Uh, when they reopened, there was an enormous gap down from the last price. So let's say you opened the position, you want to buy something right before the closure of the markets, and then the market closed for a few months, and when it reopened, you still have a huge loss in your hand. So it's going to be very interesting right now. We're literally living in interesting times. This has never happened before, and like I, read, even Warren Buffett was surprised, with this one-two punch of the uh, coronavirus and the oil prices. But overall, undeniable right now, I think we're in a bear market. It will take a lot of effort and a huge amount of, well, either a vaccine will be found by some miracle and it would actually work, or an enormous coordinated money printing, um, quantitative easing type of thing will begin worldwide. Because I don't think the Federal Reserve can just plug up the hole this huge on on the world markets. There needs to be just enormous action. And I'll get to the interest rates in a few, but I don't think they'll do it. Because looks like after they offered 1.5 trillion, we got a 9% run. Could it go higher? Like I keep saying, yeah, it could go higher, but I would be looking to short. Here's Nasdaq, and Nasdaq was one of the strongest one, but here it is on the 12th of March, entering into the bear market. So I would avoid it as well. Um, some back and forth is possible, obviously, but I would just I would just be very cautious right now, and I would look to S&P 500 and Dow Jones first and foremost before I go to Nasdaq or anything of that nature. So I'm gonna go through all of the sectors of the current sectors of the economy, and they're all in a bear market. So overwhelming evidence. Here's XLK technology. 12th of March is when the bear market started. XLY discretionary, 9th of March where the bear market started. This is according to my system. All you have to do is just look at the yellow line. If the stock closes below the yellow line on daily charts, then it's in a bear market. XLV healthcare bear market from 12th of March. XLP consumer staples, same thing, 12th of March. XLI industrials even earlier on the 28th of February, right there is a breakdown. Financials on the 6th of March, they enter into a bear market. Energy never actually even came up, so let me see where the latest bull market even occurred. So the latest bull market happened, stopped being the bull market 11th of October. Then since then, you can see this is how we would short. We would look for a bounce towards the red line, and we would sell it here, short it. So you can see very nice moves just off the red line, and the latest one was just enormous. Now, I did not short this one because overall stocks were in a bull market, so I did not want to short. I don't really normally short stocks during the, you know, overall bull market. But now we're in a bear market, so all bets are off. XLC Communication Services right there on the 9th of March, same thing, bear market. XLB um, uh, Materials, 27th of February, right there is the entry into a bear market. And notice how nicely it just happened. So I did not trade this one, but I wanted to show you. So we got a breakdown right there on the 27th of February. This is a bearish, you know, not trigger, but trend change into a bear market. And right there where I'm hovering on the 3rd of March is where I would short. It, what happened is we had a touch of the red line and a close below it. So that's all I needed to know. So if you did that, there's your, 22% gain. But if you're using options, this probably would be like 2000%. That's how much they move. Real estate, same thing. You can't really hide in real estate. I keep saying, yeah, well, people keep saying, well, it's a defensive sector. What about utilities? What about real estate? What about consumer staples? It doesn't matter. This is what I'm saying. Vast majority of stocks move in lockstep. This is what I mean by lockstep. Utilities, here they are. Utilities entering into a bear market right there on 12th of March. So all sectors are now in a bear market. Unequivocally, we're in a bear market. Can this change? Of course. And then if it changes, we will start buying again. But it is not an opportunity right now. I think this is the key point I'm trying to get across. The low prices right now are not an opportunity. These low prices could get significantly lower. And then it would also not be an opportunity because we need to look at the actual picture. Emerging markets. So this is a vast majority of countries are bearish, and I just want to show three of the kind of major ETFs that trade here in the United States, and that is namely EEM, emerging markets. So there's the entry into a bear market as early as 28th of February. But if you want to be a purist, then right there on the 9th of March is already a bear market, unequivocally so. VGK Europe, there is the entry into bear market on the 6th of March, after which there's a collapse. So another thing about trading is, I will get to it in a second, but I think, in my opinion, the most important thing about trading is just avoiding large losses. You will have small losses, undoubtedly so, but if you cut down on the large losses, your equity curve, how much money you actually are making from the profits, would multiply dramatically. So a key part of trading is psychology. So avoid means exit. Some people don't understand this, but if you have a position which is losing and all of a sudden it closes below your stop, you must exit. Otherwise, you will most likely get a bigger loss. As in, like, for example, this case, if you didn't exit here, you would have as much as 21% additional loss. Now, why would you want to do that? You do not want to do that. You want to exit when you're at your predetermined loss. Here's Japan. Basically the same general principle. It entered into a bear market right there on the 27th of February, after which it collapsed even more. So just again, I'm gonna hammer in this point that we must exit at our predetermined exits. Here's a dramatic representation of what happens when people do not exit. In fact, we were trading Chevron. These up arrows right there, these are actual alerts. This one was possibly successful, but if you didn't exit, actually it was successful. This was a successful trade. So you could have made, 4% right there, because this would have been an exit right there for me. But for some reason, some people do not exit at the predetermined stop. And there's the predetermined stop right there on the 22nd of January, would have resulted in 4% loss. Not a really big deal, if you size your positions correctly, if you're buying only the correct number of shares for your account size. So ask yourself a question. How many shares are you buying for your account size? And the answer should be somewhere in the vicinity of, if your trade is going to be a losing trade, your loss should be somewhere in the vicinity of 1 to maybe 5% of your account. So let's say you're a $100,000 account, and on this transaction, you maybe lost $100. $1,000 if it's a $100,000 account. So is it a big deal? 1% of the account is not a big deal. But if you keep open, if this position, you will lose an additional 35%. So avoid means exit. You just have to bite the bullet, admit yourself you're wrong, and just get on with your life. Otherwise, you'll get something like that. Here's another one, Boeing. Now, I didn't personally trade, nor did I send alerts about this, but I wanted to show you as an illustration. So if I was trading, I was not trading this. I did not send this alert. You can see it's a purple arrow. On 3rd of April 2019 was the latest opportunity to buy. And then since then, we can see it was just basically trading sideways, caution, caution, caution. Finally, right there on 26th of December 2019, there's the close below the yellow line. Yes, if we exited at our predetermined stop, our loss would have been 16% at that point on the 26th of December of last year. If we didn't exit, our loss would have been an additional 52%. It was 300 some dollars, now it's 150, 170. So you can see how much worse this situation becomes, and how much more difficult it is to dig out of this kind of loss. So I keep saying this to my subscribers, the paying subscribers, but I think it's worth repeating again. This is a game of nerves. You need to just be strong enough to exit. That's all there is to it. Admit to yourself you're wrong and move on with your life, because you will fight another day. And in this case, you will not fight another day, because this is a devastating loss, and most likely you will be just paralyzed from here on. All right, let's move on to bonds. Bonds, especially junk bonds, collapsed. Now, I was getting already very nervous. See, caution right there. On the 27th of February, I was extremely nervous already. Not as nervous right there on the 4th of March, although I did not send any alerts because I was like, this is just too weird. I don't want to buy it. And then we got a collapse right there on the 6th of March. I actually mentioned this in one of my videos. You can see it just unraveled afterwards. Can it bounce? Absolutely. Now, additionally, junk bonds correlate highly to the stock market. Um, this means that if the junk bonds go, stock market follows. So these two markets are very much linked together. So this case, I would just avoid. If you know what you're doing, you could potentially short. I would short at 100.32, which is a red line right there. But if you don't really want to play it, this is called a bear market project. So many people during the bear markets, they go, okay, you know what? I have no stocks, have some bonds maybe. So I'm just not gonna trade. I'm not gonna invest. I'm gonna wait until the markets right themselves, and then I'm gonna come back and do more trading or more investing. But for now, look for a bear market project, and I'm talking about things like in physical world, like people would just, work around the house. Now with the COVID virus, you can't really travel too much, but there's lots of opportunities to stay home and do things like I do a lot of yoga and meditation, but some people would do like, I don't know, organize their house or stain their deck or something like that. It's called a bear market project. So find yourself a bear market project. If you don't want to trade, if you do want to trade, then stick around because sometimes the gains on the downside are actually bigger because this types of and they're faster. So stock market or bond market takes a long time to climb up, but it just sometimes collapses like that. So we're looking for more volatility of this nature, um, and then we'll try and play it basically. Corporate bonds, and this is investment grade corporate bonds. This is a high grade bond. So look how they unraveled. 1, 2, 3, 4. In 4 days, they lost all of the gains from January of last year. And look how long it took to climb and climb and climb and it just jumped off, right? Um, I have no stocks. I have no bonds right this instant. I will show you why I don't have bonds because I don't like the way treasuries are acting. But, I have no problem. There is also a saying in trading, I would rather be out looking in than in wishing I was out. So in this case, I'm out and I'm just looking. When or if some opportunity arises, we will act on it. But for now, that's just better to look. Now, the absolute winner, I think, is municipal bonds. They didn't even take 4 days, they took 3 days. So we got one, two, a huge gap and a collapse on the 12th of March with a small rebound on 13th of March. So this thing, just look at this. This is an actual alert back in January of last year. So you have better have taken profits. And in fact, to my subscribers at MasterCharts Trading, I sent an exit alert right there where I'm hovering on 11th of March. So if you were a subscriber at MasterCharts Trading, you had a wonderful opportunity to lock in your gains. Now, if you weren't, then you unfortunately ended up most likely with a loss, depending on where you entered. So this collapse in the bond market is also of great worry. To me, this almost looks like not the beginning of a recession, which I'm fairly certain is a guarantee, but most likely a beginning of a depression. So, yeah, I'm not sure what to tell you. It just looks bad. Could it be, peppered over with money? Perhaps, but there are issues with doing that. So, for now, let's look for shorting opportunities. Here's TLT, Treasuries. Now, we did trade Treasuries. These are two alerts from 21st of January and another one from 3rd of January, resulting in 28% gain. Notice again, I sent an exit alert right there on 11th of March, and I exited all of my bond positions as well. So I have again no bonds and no stocks. I have nothing. I've been playing with a little bit of calls and puts, but other than that, not much. So this action kind of worries me. I mean, big run. Now we're gonna see some corrective action, very similar to what happened just a few months ago. Again, same thing. Look at this big run. Also, by the way, we actually played it and then topped out in August of last year. Corrective action for a long time, and finally another push higher. I think there is going to be much more corrective action for TLT for treasuries, so I would wait with any purchases. So let me look at the yield curve next. So this is the current yield curve from the 13th, Friday the 13th of March. It looks absolutely normal because the interest rate has been already lowered. If they're going to lower the interest rate to zero, this will do nothing. I'm fairly certain, but they're going to do it anyways. And then when or if there's going to be a next crisis, not sure what they're going to do. But overall, you can see that they did the right thing because just a few weeks ago, the inverted yield curve, the yield curve was rather inverting, and I keep saying the same thing in the past. Inversions of the yield curve, for example, here in 2007, and another one back in 2000, year 2000, it led to bear markets. It hasn't happened yet, but I don't think it already is in a bear market. So with or without the yield curve, looks like stocks are already in a bear market. So to lower the interest rate right now would be just, I think, a waste of perfectly good ammunition that could be used later on. So this is the reason why I don't want to touch pretty much anything right now on the long side. So I'm gonna stay out for a while. Look at this move in the short-term bonds. Somehow they bought this out. So whoever bought this out must have been the Federal Reserve here. All right, so let's switch gears a little bit. Let's look at Japanese yen and why it's important. So first, let's look at dollar index DXY. Here's dollar index. You can see the the purple arrow. So here on the 5th of February, the dollar index was moving higher in a bull market. Then all of a sudden, here on the 3rd of March, we collapsed into a bear market. And then now again, right there on the 13th of March, looks like the dollar is gaining. And this is weighing on gold finally. So it looks like silver, I'm going to show silver in a few seconds, but this is a lot of whipsaws. And like I keep telling my subscribers, if you are new to Forex, I would just stay out right now. So here's USDJPY, important for gold traders. Just a few, okay, let me pull up this chart. Just a few weeks ago, um, this is an actual alert right there on the 3rd of March on the short side, and now it's approaching the long side again at 108,193. So if the USD versus JPY rallies here continues to rally, it will weigh on gold. This is just a normal relationship. So let me show you gold. Here it is, big, enormous run from the previous alerts. Previous alerts were back in May of last year and March of last year. 32% gain to the recent highs. I think we are beginning of, I think the trend is changing for precious metals. This would be the time basically right now that I would be exiting any gold positions. In fact, I had a GDX position and I exited that in a second. I'll show you in a second. There's GDX. I exited it. I had a position recently, but I had ended up losing on this position. I exited on 12th of March. Here's silver. Very big move. Uh, there's the avoid right there on the 12th of March, and now just collapsed. So gold, silver, even though they're quote unquote printing money, they're not the gold, silver is not behaving correctly. So I would be very cautious right now with all products, with all forex products, including gold and silver, obviously. All right, let's look at oil again. This is let me look on the different chart right there. So oil, for some reason, I did not short it here. I should have shorted it. I actually I didn't send an alert either. So you can see it's a purple arrow on the 23rd of January. I am just like so upset I didn't short here because it's a 50% drop. But overall, my indicators, this green, blue, red, yellow line called MasterChartsTrading.com indicators, they they catch the price action quite well and they help you stay on the correct side of the trade. In this case, the correct side of the trade was on the downside. So right now, oil, yeah, it could rebound a little bit, but I would short it at 42 bucks basically at the red line if the price action confirms. Okay, so we're getting towards the close of the video. So let me show you one more thing, and that is our robot, which is currently trading on Binance. Here is BTC USD. A robot opened a short right there on the 8th of March at 6 in the morning, and it held it. It took some profits, but it held it because it was trailing, and it's still trailing it as the position is still open. But you can see that it was down, or rather, the gain because we shorted was as much as 56%. So without further ado, do sign up at MasterChartsTrading.com. That's MasterChartsTrading.com. One word, click on sign up. Sign up for one of the services. You can get, right now, these are called alerts. They will be converting to another service called signals, which would be dramatically improved. But at the same time, it will be more expensive. So I urge you to sign up now. Trading indicators are basically these lines in the chart. So you can have these same lines on your chart. All you have to do is just sign up for a monthly or a yearly subscription. Now, this is still up and running, the alerts and trading indicators, but like I keep saying, these alerts will be changing to signals. And then you will be getting a much better service, but yet at a somewhat higher price. And finally, algo trading interest list. So this is the algorithmic trading that I'm showing to you right now, and we are going to start um, using our API to control other people's accounts with your agreement, obviously, uh, and hopefully generate profits of similar nature, basically. So with that, thank you for watching and have another great trading week. And please remember, ask yourself a question: Why are you? Why do you need the money? Um, how will people remember you? And what is important to you, really? Thank you for watching. Bye bye.